First of all, are you nervous? Because so many people now have compared this to the crash of 1929.
We're not nervous because we are a hedge fund that actually shorts. So we're not taking a speculative view, nor have we on the market going directly up. But we're finding discrepancies in by shorting Hong Kong shares and getting in and out as a true trading fund does, which is what we do. I am scared about the market falling, though.
Yeah, what do you think? I mean, it may be, let's be honest, it's a little bit sensationalist to compare it to 1929 in a broader sense. We're too close to it now, but you've heard that, I'm sure, from other people. We've heard it twice already on this program.
We have to remember that 1929 still took several years of growth in the stock market before it crashed. The Chinese market rallied effectively over about 7 months. So the market had been in somewhat of a bear market or a stale market for 7 years after it fell back down in 07 and 08. And it only started rallying in November of last year. So it's been a very, very short phenomenon of torrential growth and then a fairly large 30 to 40% pullback right now.
And how exactly, you actually have exposure to stocks that trade in Shanghai. Logistically, how does that work?
There's a program called QFII, which stands for Qualified Foreign Institutional Investments. And for the last 13 years, this is how large institutions, through primarily foreign banks, have been able to gain access by investing directly in Shanghai. We first started investing in local Chinese stocks last summer, about 12 months ago, and were able to get our feet wet with dipping our toes into the Shanghai market. And that's basically China opening its doors to more and more foreign investment capital. But they're doing so very slowly. The size right now is only about $125 to $150 billion of foreign investment in equities. But that number will continue to grow over time.
Yeah, that number is a small number, as is the $20 billion number that we were hearing about earlier. China has obviously got a heck of a lot more firepower to put behind market support. Do you think we're going to see that?
We absolutely will. What Beijing has done recently are they're doing whatever they can in terms of policy changes to support the stock market. They want this market higher. They'd like the Shanghai Composite to be at 4,500 or higher, and they're doing all they can in terms of policy changes, interest rate cuts, and really quantitative support, quantitative easing support that will continue.
How much is the economic backdrop behind this? I mean, obviously, growth, the Chinese are used to much faster growth, as are investors around the world, and we're seeing it slow. Is that the crux of the problem?
I think slow is relative. Let's be honest. China is still growing at 7%. If it slows to a slow 6%, that's still fairly massive. That being said, valuations and multiples on Chinese stocks is still high. Now that the market has been falling, I think there will be more foreign attraction ultimately, but we're in a state of flux where I think this market is not for the faint of heart. We could easily be seeing not just 10% swings, but can be seeing 20 to 30% swings up and down fairly rapidly.
How much time have you or your colleagues spent in China?
Quite a bit. We have an office in Hong Kong, so we have our finger on the pulse to what's going on in China. Most foreigners, like ourselves, have bases in Hong Kong. So I'm over there at least quarterly, if not every other month, either going into China or talking to brokers and salespeople and analysts that are all primarily either visiting or based in Hong Kong.
Then I want to put my Jim Chanos hat on for just a moment. When you talk about the Chinese government taking action from a regulatory standpoint, how much do you believe the information we get from them?
It's very difficult. Let's be honest. This is still a closed economy. This is the last big emerging market that we will ever have in this world. China, 1.3 billion people. The magnitude of growth, the size of the market capitalization. This is big, yet it's still a communistic society.